Good afternoon, my fellow traders. My name is Michalis and I'm one of the market analysts here at HFM. And I'd like to welcome everybody to another live trading session where we're going to be looking at the British pound against the US dollar. Now, we're particularly looking at the British pound against the US dollar because number one, the best performing currency of the day is the US dollar. It was also the best performing currency of yesterday. And so far this week, is the best performing. But in addition to this, the worst performing currency of the day is the British pound, which is decreasing in value against all currencies. If we look at the UK and the British pound index, the British pound index is trading at 0.30% lower. But why are we seeing a rise in the US dollar? And the answer to this is mainly related to the US employment sector. If we look at the employment sector and the data which was released yesterday, if we look at job vacancies, they came in significantly higher in December than that which was expected by analysts, and also higher than what we saw in the previous months as well. In addition to this, we've seen PMI data from both last week and this week coming again significantly higher and higher than what was expected by the market. Now, we've also got employment data being released today from the ADP employment change. But in addition to that, we have tomorrow the weekly unemployment claims. And on Friday, the main event, of course, we have the US unemployment rate, the average salary increase, and also NFP change as well. So this is all related to the monetary policy. So far, economic and employment data has been so strong, the market is now not expecting an interest rate cut until May. So we're talking about the second part of the second quarter. So we're going forward approximately 5 to 6 months. According to analyst expectations. And this is why the US dollar has been increasing in value. So what opportunity is that providing us within the markets? Now, if we look here at the cable on a 2-hour time frame, we can see because of the decline yesterday and because of the continued decline today, we are trading below the 75 bar EMA, we're trading below the 100 bar SMA. And if we're looking at the RSI, we are comfortably below the neutral level of the RSI. We're currently trading at the 41 mark on the RSI. Now that gives us an indication that there's signals pointing towards dollar strength and that sellers are controlling the market. So the price moving in favor of the US dollar. So this is something that we potentially need to take into consideration. But if we switch over to a 5-minute time frame, ladies and gentlemen, we can see that we're definitely still witnessing signals and indications from technical analysis pointing towards a continued decline. We can see this, number one, from the crossover that we've seen here. We can see the 8-bar exponential moving average has crossed below both simple moving averages. We're trading comfortably below the 200 bar simple moving average. And if we're looking at the MACD is comfortably in the negative zone, again indicating that there's an imbalance in favor of sellers and sell orders. And to be honest, we're still comfortably seeing a bearish crossover. We haven't yet seen any volatility indicating that there's about to be a bullish crossover. So there's a couple of things that we can take into consideration in regards to individuals who wish to speculate downward price movement. Now, we can look at the breakout of the most recent low. Like we said already, we've already established on the 2-hour and the 5-minute time frame that indications are pointing towards a downward price movement. But we just need to be cautious about the volatility. And this is why potentially we can look at different entry points. So the first entry point that we can potentially look at is the breakout level. That's known to be a very well-known indication. Alternatively, because we're already seeing a decline, ladies and gentlemen, of 0.43%, that's quite a lot of volatility for just the Asian session. Taking that into consideration, some individuals may believe that the price will retrace. And to be honest, that's not something which is unheard of. That's something we see quite a lot in the market. So if we are going to see a retracement, just for an example, if we see a retracement like this, then what a lot of traders may potentially look at is when we're going to see momentum being regained. So for example, when we're going to see a 65% regain of momentum when we're measuring the retracement. So if we measure the retracement here, we can see 65% momentum being regained is at this level here. So if we are going to see a retracement, this is a potential area that, again, we can take into consideration. Now, alternatively, we're going to see a larger price movement upwards and we're going to see a correction. Then areas where individuals may potentially look to buy is actually where we go back to the price range. If we go back to the price range here, and this is also a support level, this is what is known as the support being flipped onto the resistance. That will most likely fall in line with the 200 bar simple moving average. When we hit that 200 bar simple moving average, a lot of the time people re-enter the market and the trend continues. So that's something potentially that may happen and potentially something traders would like to take advantage of. So if we're going to see a larger correction, individuals may look to re-enter a buy here or to enter their first buy here to then take advantage of the trend continuing. This is, for example, something that we saw here. We saw a retracement upwards, bullish price movement, but as soon as we got to that 200 bar simple moving average, the price started to move back in favor of the trend. Now, what do people want to also be cautious of? They want to, of course, see that the US dollar index continues to increase in value. Ideally, individuals may also look at the US bond yields. Ideally, bond yields need to continue rising. That will also is known to support the US dollar. But one of the main things individuals will be looking at is the employment data, which is going to be released today, tomorrow, and on Friday. If today's ADP employment change comes in higher than expected, and tomorrow's weekly unemployment claims comes in lower, and then on Friday, we also get again positive data from the employment sector, that is something which strongly supports the US dollar. And again, these entry points will again start to materialize again. So these are three potential scenarios that we may see, whether we see a retracement, whether we see a correction, or whether we see neither a correction or retracement and the momentum quickly regains. We've got the breakout entry point. We've got 65% momentum of the retracement being regained as an entry point, or buying back at the trend line. Speculating a sell back at the trend line there. Now, in terms of where traders may potentially aim for in the short and both medium term, of course, short-term traders, depending on if you're a session trader or a scalper, you of course have your own reward to risk ratio that you're going to follow. But in terms of where potentially the price may continue to drive to, a lot of traders will definitely be looking at the support level here. And for those traders which are slightly more risk averse and want to be slightly more cautious, they may look at 75% of that. So if, for example, we measure this price movement here, now if we measure this price movement, we're looking at a price movement of, let's say, at 1.80%. So 75% of 1.80%, that is approximately 1.35%. So if we're going to look at 1.35%, that's a slightly earlier exit. So 1.35% is exactly here. So some individuals may look to exit the market to be slightly more cautious earlier, which is at 75%, for example, here. Other individuals may want to continue speculating all the way back to that support level, particularly if all employment data released from the US is positive, then that can strongly support the US dollar because it increases demand for the US dollar. And also there's a higher possibility of a hawkish Federal Reserve and them becoming more reluctant to cut interest rates, potentially not even in the second quarter of the year. So that's something we will, of course, continue to monitor. But for the short-term traders, of course, they'll be looking to enter and exit along the way towards those targets. And of course, individuals may wish to take into consideration a stop loss. If you're not going to, of course, put a stop loss, then of course you will take into consideration a limit which is in line with your success rate and your reward to risk ratio. So that's it for the moment, ladies and gentlemen. A quick roundup The US dollar is the best performing currency of the day and of the week. Today's worst performing currency is the British pound, along with the Swiss franc. The reason why the US dollar is seeing such strong increase in demand in the short term is because of strong economic data, particularly from PMI reports, but also from the employment sector. For example, yesterday's job openings, which came in much higher than recent months and also higher than that which was previously expected. So that's it for today. We've looked at what the indications are from technical analysis, potential entry and exit points, and we're looking at exactly what is driving the price in this direction. So that's it for today. Hopefully you found today's session educational. In the meantime, goodbye.